Now, can I introduce Ms. Julia Leung, our Executive Director of the SFC? Just very quickly, actually, to share, Julia also has been recently appointed as the Chair of the Asia-Pacific Regional Committee of the International Organization of Securities Commission. And I think that role will be particularly relevant to what Julia is about to share with us on the regulatory trends for digital assets and Web3. Thank you, Ms. Leung.
Thank you. We have a room full of professionals here. And I think when Bernard was talking about pivoting, talking about crisis, how you turn crisis into opportunities, there's a bit of a common thread here, because I'm going to talk about fintech, talk about building an ecosystem to shape the future of finance. I think one thing that we share in common is technology is changing the face of everything, and we need to keep in place to be relevant. Now, I just take an example. I see a lot of you having your smartphone on the table. So it's one of the gadgets that has changed every facets of our life. It's still called a phone, but it has a camera. You can stream and video here, there, and you can listen to your music. And it replaces the PDAs to be a note taker and tape recorder. So because of this invention, a lot of products has actually gone out of the market, like fax machine, pagers, analog mobile phones, Blackberries. So the digital revolution made a lot of former household names have become goner, transformed. So today's innovators become tomorrow's legates. So you do have to be kept in pace, otherwise it would cost dearly your business. So the question is, would actually the technology, the promise of DLT, distributed ledger technology, would it drive a revolution in financial services the way that the technology has changed the household consumer electronics? So we all know that DLT has a lot of use in global finance, in digital assets, in trade finance, and the underlying technology is efficient, could potentially secure a transfer of real-world assets. So, but what would it mean to put all the financial services and products on DLT? Can we actually change from the existing traditional financial infrastructure and put them into a blockchain? Have we reached that inflection point yet? And that is to deliver financial services, whether it's creation, redemption of funds, for example, and put them all on-chain. Now, Bitcoin. The debate is, the first wave of this, people not talking about the blockchain, they're talking about Bitcoin, because the prices have moved. So, and there was a lot of debate whether Bitcoin or Ether have actually any intrinsic value. Now, central banks and most economists will say no, and I do not disagree with this view. But 15 years on, Bitcoin prices have gone through many booms and busts, and it's still there. So it's, as an alternative asset, it actually has lasting power. But one thing is even clearer, is the underlying technology of these Bitcoin or Ether, DLT is going to stay. Now, Bored Apes. The potential benefits of DLT potentially enhances efficiency, lower the cost of distribution, clearing, settlement, and custody of assets. You already see it in Bored Apes Yacht Club. The art industry offers digital artwork in the form of fractional settlement, more affordable NFTs, so that more people can own it. It revolutionizes the ownership and the transfer. You can sell from one to another. And Ether and stablecoin are being used as the medium of payments for these transfers, and they all took place on-chain. Now, it used to be there is a wide gulf between NFTs, metaverse, and real-world assets. So BAYC was a hype in 2021, but the floor price and the trading volume have all plummeted. So while Bored Ape has gone out of fashion, this transformative model of the use of DLT is being promoted for real-world assets. Increasingly, promoters are talking about real-world assets giving a new life in DLT in recent years. Tokenized physical assets such as plane tickets or Andy Warhol prints, fine art, collectibles, and even real estates. Now, the potential benefits of tokenized real-world assets are financial inclusion. So for Andy Warhol prints, you can actually share it, fractionalize it, and own it. So that's what the younger generation would call democratizing finance, so that more people have access to the investment opportunity. There are higher transparency and privacy between transacting parties. They can employ encryption to share ownership and transaction records confidentially. Greater settlement and efficiency and lower payment, because you can actually have delivery versus payment at a very lower cost and fewer cut out the intermediaries, fewer counterparties, and shorter time for confirmation and reconciliation. But actually, you can actually look at it. There's one more advantage, is transferability. Now, with Monad's fine art like this, where water lilies and sunrise, think about it as an alternative asset. Now, it's nice to look at it in the museum, but think about it. Why would people lend, if they own it, why would they put it in a museum? It's because of the high prohibitive cost of home security system, insurance system, and most of all, they can't go to a bank and borrow and take a collateral loan with these as collateral. But I think there's been a lot of discussion, and probably happening too, for tokenizing fine arts, so that the owner and the art itself can be custodied in a very secured warehouse, such as that of an auction house, but then using that token for transfer, and also for borrowing, and using the token as collateral. So tokenization, it's been argued. There's a wider financial inclusion, fractionalization, custody, ownership, all on-chain. Now, could we have the same potential benefits when we are putting traditional financial products on-chain? Now, that was the vision a lot of people was promoting, this vision for the future of finance. That is, if you have a bond or money market fund, the primary issuance, secondary market trading, custody, and hypothecation of these assets could be done on-chain. It sounds very attractive, because currently, if you talk about most of these cross-border payment system, you're talking about T+2. And of course, the US and others, India, for example, has all moved to T+1 or even T+0. But still, you're talking about quite a lot of confirmation because of the use of intermediaries. And so if you have it on-chain, it's supposed to be, you can achieve atomic settlement. But a lot more needs to be done to achieve that. The DLT ecosystem needs to expand. It needs to scale up. It needs interoperability between the different blockchains. And it needs to have finality in payments. You have to be sure that when your record keeping is there, is final, and the cross-border settlement, and also any conflicts in law has to be resolved. So interoperability is essential to a Web3 ecosystem, and because it ideally would connect all the blockchain, and then that's where you can achieve scale. Now, coming to Hong Kong, our Web3 ecosystem is still being built up. Last year, the Hong Kong government issued the world's first digital government green bond. And in February this year, it was followed by a second batch of tokenized green bonds issued on a private blockchain, and in which you apply primary issuance, trading, settlement, coupon payment, and maturity redemption all on-chain. It was a Hong Kong dollar 6.8 billion issue, and they're all subscribed by global institutional investors, and we have a supportive legal and regulatory framework. Now, the suite of digital tokenized products is expanding. Just a few months ago, the SFC authorized the first tokenized investment products, a gold token for retail assets in Hong Kong, and the issuer is HSBC. The AUM is not huge, it's 12.8 million US dollar. It minted 5.5 billion token, and it gives possession to each token would be about priced at about 18.2. And each token represents 0.001 troy ounce in local London gold stored in the bank's vault in London. So you can see that it's represents a real world asset, a gold commodity, but it's so fractionalized that for a $2-3 US, you can own a token and you can actually hold it. Now, and this is again is an in-house private permissioned ledger using DLT. It hasn't got the ability for secondary market trading yet, but the investors can subscribe and redeem online anytime. Now, as part of the ecosystem, the SFC also authorized 6 ETFs with cash, Bitcoin, and Ether underlying, and it started trading at the end of April this year. Now, as of now, it has a total market cap of $300 million US, and the Ether is actually the world's first Ether ETF. The Bitcoin, the US already issued back in January of this year. And the daily turnover is around $7 million US per day. So it's a decent turnover. But what we were pleased to see is that in every interaction with the public, it's all licensed. That is, the creation, it has creation in kind, and the creation of the ETF units, they have to do it with the licensed virtual assets trading platform, licensed by the SFC in Hong Kong. So, and also, we also have additional guardrails on the distribution of these ETFs to make sure that retail accessing it have sufficient knowledge about the products. And of course, we have warnings that the prices of these Bitcoin or Ether is actually very volatile, so sufficient investor education. And certainly, we're not endorsing or promoting virtual assets as a class. But for those who have sufficient knowledge and want to gain access to it, we enabled a channel in which they are all licensed and regulated and can be traded in the stock market with liquidity. And this is much better than going online into some unregulated platform overseas. Now I want to turn to some regulatory thinking behind the development of Web3 ecosystem. Now you keep hearing that innovation and regulation are opposing forces. But I think we have a very strong belief that two should go hand in hand. And one of our 2024 to 26 strategic priorities is to transform financial markets through technology. Our fundamental tenet is very simple. We are technology neutral. We adopt the same business, same risks, same rules. and now, which has now become the international rules for IOSCO and for other central banks and securities regulator. And we do it out of investor protection. Now, why do I say so? It's in 2018, we were one of the world's first financial regulator to introduce a comprehensive investor protection policy in response to FIA activities. And that is at a time when the regulatory landscape is non-existent, basically. And that was a time when FTX and others were building up, and it was it's actually collapsed. But we were the first one to come out that we need to regulate it fully, the same way as we did, because the platform is basically an ATS plus a broker and dealer. So we basically using the same principle of regulating an exchange and regulating a broker. We impose those for the licensed platform that we have now. Now we encourage tokenization because potentially we see the benefits of efficiency gains and lower costs and financial inclusion. The way we look at it is now the industry is the one who comes, when they come to us for how we look at tokenization or whether we will allow them, we would say yes, because if you think that there's market demand, we will provide the kind of guidance to you in order to operate and test the market. We look upon it as a technology wrapper around the traditional products. If it's a bond, tokenized bond is still a bond. If it's a equity fund, it's still a fund. And so you have to observe whether you're issuing or distributing all the requirements, conduct requirements that we imposed in it. But then last November, what we did is we set the expectations for the new technology part on technology part to mitigate the risks associated with the new technology. So we actually encourage responsible use of innovative technology to drive the efficiency gains and foster the sustainable Web3 system. Now, block by block, we are building up the Web3 ecosystem. The purple part are the ones that we already done. Like a year ago, we already have the licensing regime, it came into effect. And so you see, you have 2 licensed platforms and a dozen of deemed license, which we are processing. Now, we already have the tokenized product circular, which I talked about the tokenized products. And we have the guidance on, the HKMA has the guidance of digital asset because custodian service is important. So if a bank is operating a custodian service, HKMA laid out very clear guidance in that respect. The blue ones are the ones in work in progress. You have the stablecoin regime, which the HKMA is taking forward. And then the government is also consulting on regulating the OTC dealing, OTC shops and other OTC dealings. And furthermore, I think the next phase of tokenization, as I alluded earlier, will be to achieve scale. So in March of this year, the HKMA launched the new project Assemble on the wholesale central bank digital currency. So SFC is a member of that architecture community aiming to collaborate with the industry to support the tokenization of the market development. The project will initially focus on tokenized bank deposits, which is here, and also, which are also used for future tokenized asset transaction. A core part of the project is to harmonize the protocols of the blockchains, of all these blockchains, so that when a bond issued by one bank can be actually sold to another customer in another bank. And it has the cross-border element to it. Now, in concluding, we all agree that technology have brought about a seismic shift in the financial markets. We do not know whether TradFi will actually be put on the blockchain and also deliver all the financial services, whether it's Forex or bonds or even stocks, will give way to smart contracts and DLT. I think it's the industry here sitting around the table. You're the one who know best your customer needs and whether we should move onto that journey. It's our job as a regulator to provide 3C. What I meant by 3C is clarity, certainty, and consistency in our regulatory framework to facilitate these cases so that they are being piloted and expanded and used in a very safe environment for investors. So you might have heard before that if you find technology disruptive, the chances are you're not quite ready to embrace it. As I said in the beginning, household consumer products, brands lost their shine, and it's a reminder that you have to stay relevant in this digital age. Just as Bernard was saying, you need to pivot. So we are championing responsible innovation and building an ecosystem, but we're all in it together to shape the future of finance. So the future is now, and it's important that we get hold of that opportunity. Thank you. I'm sorry I was overrun, so I guess that means I don't have to take any questions.
Thank you, Ms. Leung, for consistently providing clear and certain messages as a regulator to all of us.